talked about today, what's important. First off, we came into the day, and I'll get the highlight tool so that you can see this. We came in today with the notion that we had a secondary higher high in price, and you can see on balance volume, more importantly, our volume indicator right here was showing what's called bearish divergence. The market had a resistance line in the sand right here. This is, again, a 60-minute model. It went short on a breakdown, but it is without due follow-up, I will point out to you, we normally will take and just use the 5-minute model in the live trading room. I'll get to that in a minute. But before I do, I thought it'd be nice to just give you some insights of what we were talking about for swing traders. Now, short term, we would look for a market to pull back down, and it's exactly what happened, and went short and took a profit. Beautiful. On a small, short-term, 60-minute time frame. Now, there's this pink line in the sand. You see this big dashed line? This represents old resistance and new support. What we talked about this morning is if we take out the volume trend continues to weaken and a close underneath that pink line in the sand, then the next major target would have been around 28.90 or lower. These were discretionary trade lines that we put into the market. And I want to point out to you, this is still valid. Everyone should be focused on this. Despite the fact that we kind of got a reprieve from a bounce up off of support, a close less than this line in the sand is twofold dangerous for bulls. It closes below weekly pivot, and it closes below a major important swing line, old highs, old lows kind of thing. But this has been going on for more than half the month, 2 weeks. So it's a longer, like intermediate term time frame. So the longer the support holds, the better it is for the outlook. The longer a support level gets tested and then violated, the worse it is for downside action. So that's what we got to be watchful for. All right. So that's what we talked about in the live trading room today. And that analysis set us up for this particular trade. This is our 5-minute trade model based off the person algo optimizer. There's the trigger that went short. We were in this trade going back and forth, nowhere forever. This is the stop. This was the initial profit target. It scales out. And then what does it do? As the trend went up, it got out on the second half of the position, but it did something else unique. At 32.25, it covers the short position and initiates a new long. So the current trade that we have on, we are long from 32.25, as I just said. It's up $525. You can see that it's a 2-lot. So this is what the live trading room is all about. We have 2 trading rooms. One that goes over our ETFs and stock position, and this is the algo room. Now, this is an interesting component because we had a short on VXXB. It took a small loss right here, and now is flat the market. More importantly, we had a nice little trade long in the spiders. It got out and went short. So this would be interesting to see how this plays out as far as a swing trade. This is the pivot support area, and this is the stop loss. So going forward, the 60-minute model has done a great job this year for swing trading. I think today it's the end of the month. I'm not sure what to read into this because, as you can see with our other trades in our algo room, we had a nice little breakdown in the crude oil. It went short. It got out. We now reversed. It got out of one, and you can clearly see that's where the crude oil, it lists every trade we have right here on our strategy position. It's now still long one. So it got into 2, got out of 1, and it's trailing a stop. By the way, here's the stop on that chart. So if you come in the live trading room or you're new, that little red dot, that's the new stop loss. So if that's your entry, that's your stop loss. If it keeps going up, it's going to trail a stop automatically. This is our Algo 17 Extreme product. This is what we run the live algo trade room on. So everyone that gets the weekly newsletter, they have access to the live trading room for free. Or you can just sign up for the live trading room and piggyback off of these trades. And every morning I come in and do our morning market briefing here for our traders. Lastly, I want to get into this and then we'll start looking at some stocks. the euro currency. Where the hell is this thing going? I mean, based on open interest, based on trading ranges, based on market conditions, this is a wasted asset. Not a lot of people in this trade. Open interest is only 529,000. Why? It doesn't move. I mean, it's a dead market. What do I mean by it's a waste of capital? The margin requirement to hold a position overnight, your money could be suited elsewhere. So into this trade, it's kind of like really hard to make money. As you can see, this is a 60-minute chart. What do I mean hard to make money? I guess you can make a few ticks, but when a market goes nowhere and then literally in less than maybe 45 minutes to an hour, it does 80% of its range. If the range is 48, 50 points and you get 30-point move in 45 minutes, for 24 hours, you're sitting there doing nothing. And that's the way this thing, look at the way it moves. It does one big bar and then sideways. One big bar, sideways. One big bar, not a lot. So it's one big bar, not a lot. One big bar, not a lot. That's just the nature of it. One big bar and then nothing. So one big bar and then nothing. Well, why am I talking about this? Because usually we are right now at a historic low ATR. We've not really seen the euro currency at a 48, 50-point range. And it means, it doesn't suggest that there's a trend change coming. It suggests that when volatility goes to an extreme high or an extreme low, there's a reversal. So we're looking for a reversal. I don't know what day, hour, week it's going to come. But since this is the end of the month of April and we have monthly unemployment reports, the Federal Reserve talking tomorrow, ECB and cross currents with rates between U.S. and Europe markets, there's a potential that come in May, we see an expansion of ATR. And that means that we have better chance of making money riding trends on intraday day trades, right? So that's where the logic process I'm going for you guys is. If we have another set of unique tools that we can determine a trend change, then that means we can ride a move to the upside if we're bullish. Now, I already let the cat out of the bag because here's a little something for everyone to consider. This yellow line is a specific swing level. You'll see blue line here, blue line there, blue line there, blue line there. What does that blue line represent? That represent the weekly pivot point analysis. Typically, when a market breaks and closes below weekly pivot, it signifies downside move. But over this length of period of time for a whole month, if we can get a breakout, a daily close greater than that 113.25 handle, then that will open the door for a higher move. How much higher? Let's turn to our daily charts. So here's what I'm looking at, Euro Currency Trader. It signifies that possibly we get either strength out of the euro or weakness out of the US dollar. And, you know, I'm not saying it's going to be the greatest move in the world, but look at this. You can clearly see a lower move in price and a higher move in indicator. What is that indicator? It's a volume indicator. And it detects the changes based on the futures, not the Forex spot market. This is the futures. And it suggests that this secondary low from a primary prior low was on weaker volume, which means it's susceptible for a breakout. Now we turn to the Commitment of Traders report, and I'll just fast forward this. Speculators, both hedge funds and small retail traders, are short this market. So there is fuel for the upside for a short covering rally. So that, I think, a lot of speculators added to their shorts the prior week. As of the 23rd, they added to shorts. So they added to short positions. They are trapped on the short side. Where do people start freaking out? Not at break even, when they start losing money. So a daily close greater than that 113.25, to me, I think will initiate a move back up to 114, and then eventually the top end of the range here at around 115, 116 handle. Is that a big deal? Not really, but I mean, it's a good almost 350 to 400 point upside move coming sometime, my guess, within the next 30 to 45 days. That's what you want to be watchful for. There's your clue as we exit April and get into May. All right, let's look at some stocks real quick. All right, before I get into stocks, you can clearly see we've got a price recovery going on in the S&Ps. We have a breakdown in the VXXB, which is cool because we just took out the prior hour's low, very important. By the way, another metrics that we teach our traders to use here is the advanced decline on the S&Ps, not the advanced decline on the NYSE. Advancers are 281, decliners are 216. That means more stocks are going up. That's positive. I mean, the fact is we're like, what, 11 points off the high of the move for the whole, I don't know, 7 months in September. We're at 7 points off that high. That, or 11 points, excuse me. But that's not that expressly bearish. So that's pretty exciting stuff that the rally is holding. It's a shake the tree out, and then it comes back up late in the afternoon. If the volume in this market kind of holds up and breaks out, that's another positive. All right, let me bring into you the next big potential upside move. What we've been stalking for our live trade room and our clients, as well as in the weekly thoughts and observation, and of course with J Person Asset Management, is the Russell. The key to the Russell will be the biotech. This is Labu. I'll bring this up to speed for you real quick. We need a breakout above that green line in the sand. If we can get a breakout above 53, let's call it 77, we're back above what? The weekly pivot, daily pivot, and we clear these overhead resistance lines. We need good volume to participate in that. So the on-balance volume needs to break out above its prior swing high. That tells me that now investors, aggressive hedge funds, are back into the game, and they get committed. They're not day traders. So Labu is the secret to getting the Russell going. We had 3 components that we've been watchful for. XOP, which oil and gas exploration, small cap energy, took a kind of a nosedive off that breakout. We came in and filled a gap. That's what this signifies, and the information we already covered in our live trading room this morning. We were looking for the market to come back to fill that gap. I'm not getting short the market on XOP. Seasonally, we start to see upside moves in early May, so this was a welcomed pullback. When do I look to get long? Well, I would look to get long when the price gives me confirmation. First off, I need a little buy signal, a PPS buy signal. Second off, I need an uptick in volume to support that. Third off, I would want to see the market get back above its weekly pivot. So even though we fill the gap, that's good news, but if we got to get XOP, oil and gas, above that 3190 handle, 3195, to get momentum going and use volume to confirm. All right. If that occurs, now we've got the biotech, then we've got the energy and oil and gas exploration sector, and then the final key is this guy right here, regional banks. The regional banks did get a little breakout. All right. The regional banks right now need to get back above its swing high. So the volume here, that's definitively weak. So it doesn't illustrate a lot of strength. There's too many factors involved to say biotech looks, the Russell looks great. But what I would tell you, if we get those 3 spaces in sync and get some jam going, by the way, take a look here. Wow. Upside breakout, we need a close greater than that 68, and then you want to be on TNA, and then you want to be on the Russell. I've already given some upsides, and what I would say on the Russell, and last, and I'll wrap this up quickly, is this. The Russell on a daily basis, if we break out above that high, I'm talking September, October highs again, 924 is 170. That's what's at stake for stalking and watching XOP, biotech, and regional banks. That's a moneymaker. This has been held back all year. People don't believe in the growth sector. But I can tell you, the volume is starting to look a little more attractive. It's trending up, but we need price breakout. Price is king. We need a price breakout and a close greater than that green line in the sand. And if we can get that, then it looks like we've got a potential wealth builder and a major upside move coming from about 160 at the very least to the 170.72 handle in the IWM. So then option traders, you can start to plan ahead. You probably would see that move typically within 45 to 60 days. So that would be 2 month out options on the Russell. That's what we're looking at. And then lastly, as I may just bring this in to focus for you guys. And as you can see, our long position in the ES is still climbing up, making a lot of profits here for our algo traders in the room, up $800 right now. Crude oil, that little long scaled out, still up profits on the second half, only long one. Remember, it's scaled out. It's all looking great. It's all looking beautiful. So strong breadth of the market. But here's the last thing we're going to follow up with you guys. All right, this is our radar screen. I don't like to look at just like the daily analysis or the weekly analysis. I like to look at our monthly stuff. Everything that had been in a downtrend. For example, we were in a little downtrend in the monthly person's pivots, bearish outlook for Russell. It's now flipping into bullish. The only thing that's flipping bearish was gold, which was bullish, is now flipping bearish. You'll notice here, XLB, bullish. It was bearish, so it's flipping. So take a look at what I'm reflecting here. This is the material sector ETF. Here's the new fresh buy signal warning us that it is breaking out. So volume looks pretty wholesome. My volume indicator looks wholesome. And if we get a breakout and it continues, boy, this thing could really get some luster and help support the upside in S&P. So I can't get expressly bearish the market when almost every sector is still in a monthly buy signal longer term, with the only thing in a down flash would be gold. I'll keep you posted on what else happens. We got to wait till the close, of course. Anything can happen in this market. But I hope you like the insights. And again, the clear-cut, concise way of trading the market with the Person Algo Optimizer at the helm is certainly just a killer in helping all our retail clients come in here and say, hey, if a system is short, it's got to be a good trade setup. Let me do some due diligence, follow up, and see if my logic also follows suit, and you can follow those trade along. That's the whole nature of having our trade room like this built. I don't think there's one like it on the planet, at least the one that we have here at Person's Planet. Thanks a lot, everybody. Have a great month ahead, and we'll be following up with you on new fresh signals in the coming days. Thank you.